In this video, I'm going to give you 2 trades that I did on Bitcoin Cash, but a very important understanding when it comes to assessing your success. You'll find this piece of knowledge to be an absolute game changer. Hi everyone, I'm Ken from TradingKS. Here you'll learn so you can profit like smart money. If you find the content helpful, don't forget to smash that like button and subscribe. Let's run the numbers. Over the past week, you would have seen a lot of news headlines about FTX liquidations, and FTX liquidations did cause retail panic that drove the crypto market down. But since then, crypto has recovered, and it's recovered strongly. Many people get desynchronized when they read the news because the news is always horrific. It says and screams one thing: stay away. Other news headlines were screaming stay away, FTX to sell $3.4 billion in Solana, Bitcoin and other tokens. Who on earth would get into the market given the court approved that sell? Why would anybody get into Bitcoin Cash, for example, or any other crypto, knowing that retail could panic and drive the prices down? And especially looking at Bitcoin Cash, how overextended was it around this period of time? Let's just zoom into that particular area. It looks like it was topping, pulling back and probably going down on that FTX news. You would have to be pretty much nuts to get in, or would you? The news was indicating quite a sell-off was at hand, but I knew the objective dynamic market structure of Bitcoin Cash. I was synchronized in with the other charts. One thing that I did, I placed 2 trades. You can see I placed one here and then a lower one. These particular trades were all about objective dynamic market structure through the CTKS method. That's just a simple way of saying I knew where smart money was buying and selling. The structure there looked very good. One thing that I do, when I place a buy order, I instantly place a sell order, and you can do tripwire trading as well. You can place a sell order at a key level of market structure to see how it reacts. It's important to understand when you place a trade, you're relying on probabilities and stacking probabilities in your favor. Let's have a look how price went. Price reversed. There was my tripwire from this lower trade. That coincides with a good area of market structure. That was supposed to be a trade that I could get into to actually just layer up on trading. But unfortunately, I got busy with other things and I missed it. You'll find that this happens all the time to you. Don't worry about it at all. But that was the purpose of selling there. What about this particular one? Trade number 1. Where did I put the sell level on that? Let's have a look, and don't forget I placed this sell order when I bought it, when it was filled. I placed the sell order all the way up right there. That is a long way away from price action. Did I get the top of it? No, I didn't, but I don't care about such things. If you look at how price was trading, that was a good probabilistic move that I could take advantage of. So that's what I did. Inside the masterclass, I always show my trades. I always show the documentation of what I do. You can see this 208.80 trade, this one here. Bought Bitcoin Cash 208.80, $1,000, and then sold that exact same quantity at 221.30. Bought at 206.90, this one down here, and sold it at 210.90, that tripwire there. How did I do this, and how did I have the peace of mind to be able to enter the market with such incredible negative news? The first thing that I applied is Rule 240. I looked at the CTKS structure, that is where smart money was buying and selling. How did I do this? I overlaid the CTKS method indicator for Bitcoin Cash, which came from the service, on my TradingView chart. The Bitcoin Cash indicator is just this one, and I popped it on to see where the objective dynamic market structure inside Bitcoin Cash was. I saw that there was quite a lot of support when I placed level 1 and level 2 trades. Level 1 was more of a participation trade, level 2 was a structural trade. and level 1 sell was a structural sell, and level 2 was a structural sell as well. When people first start trading and investing, they think they must get 10x's, 20x's, 30x's. If they're not getting double-digit gains or triple-digit gains or quadruple-digit gains, they're simply failing. This is absolutely false. We know inside our community you don't need to make big percentages to make big percentages. Let's have a look at this second trade, which is a tripwire trade, to explain that you don't need to make big percentages to make big percentages. We can see this 999, that one there, and that 1019, that one there. I made 1.933% return, but this occurred under a day. If I just kept on doing that, I would have a return of 108,906%. That beats bank interest, even if bank interest was just that last digit, 6%. It's a big percentage. This is what the masterclass students know. If your annualized return on investment is anything better than 50% or 100%, you've done incredibly well and you should be very, very proud. Unfortunately, new traders and investors, or non-professional traders and investors, confuse the return on investment with the annualized return on investment. They think that a huge ROI, not a huge annualized ROI, but just a huge ROI is the thing that they should be looking for. In fact, professionals don't think that way at all. They're looking for a low return on investment and a very high annualized return on investment. Completely different thinking. When we look at this basic return on investment, and we can see that 94.32, this is this buy level. The returned amount 80.57, that is that one. And of course, it's all done in less than 24 hours. The concept is the annualized return on investment is just nuts. It exceeds that 50%, that 100% threshold. That means it's a good trade. The key for you to focus on is especially pump your annualized return on investment over 50% or 100%. In doing so, you'll do incredibly well, and you will guarantee that you will be more of a financial blessing to yourself and those you love. And that's what this channel is all about. Every professional has tools. It would not be possible for me to do that Bitcoin Cash trade without this Tier 2 Smart Money indicator from the service. I'd like to share Rule 657 with you. It's important to get rid of emotion. Emotion is crippling to professionals. Instead, having a knowledge of the structure where smart money is buying and selling, that's what you need to know. Indicators are good, but when you know where smart money is buying and selling, that's even better because you can use it to predict. That's exactly what I did in that trade. There were many things that I was looking at. I was looking at the market pulse, the overall structure and price reality. I didn't get caught up in just looking at the Bitcoin Cash chart. I didn't make a story about recent indicative price or the FTX sell-off. I just looked at what price was doing. And of course, I had my three-dimensional risk management. The beautiful thing is, with the knowledge of these 27 indicators, I can trade anything. I just apply my knowledge. Jim Rohn said a very powerful statement: successful people are prepared to put in the hard work that unsuccessful people will not put in. To be a professional, it means you need to put in the hard work. If you want to be the #1 world tennis player, you need to work hard at it. You can't just sit on your couch and watch TV matches and say, I'm going to earn $170 million a year by being world #1. It doesn't work that way. And you are successful in various areas of your life, and you've worked hard for that as well. Understanding where smart money is buying and selling is an absolute game changer. Understanding the three-dimensional risk management curves will help you tremendously. They're also inside the service videos. I did a deep dive on those three-dimensional risk management curves in yesterday's episode. There are many forms of trading inside the masterclass. You can do tight trading, cycle trading. There's so many different types, but you must get the knowledge first. The masterclass is the academic side. It's extremely powerful, and just like everything, if you don't know what you're doing, you're in a lot of trouble, especially financial markets. The masterclass represents more than 3 decades of knowledge transfer, and Perperatum has very kindly offered a CTKS partial masterclass scholarship. You could be the awardee. You can apply in the link of the description of this video. The masterclass is the understanding of financial markets, putting all the things together. The service, which exists independently of the masterclass, is the practical tool that you can overlay on your TradingView charts, and each particular indicator comes with a video and 3-dimensional risk management paths for the entire month. You could say the masterclass is the theory, the service is the practice. There is a special foundation membership on the ctksmethod.org site. This is closing very soon. You can see what I did with this simple trade in a period of high volatility. Also, we had the quadruple witching in the markets. It didn't matter because price structure is price structure. The foundation membership is closing, and I would suggest that you give the service just 1 month to check it out. You have everything to gain: 27 monthly videos, 27 TradingView indicators, and 27 3-dimensional risk management curves for those Tier 1, Tier 2, and Tier 3 charts. When you're doing your trading and investing, it's important to have the concept from the CTKS creed. You either win or learn, and never blame. Don't feel bad at yourself for missing the top. It's irrelevant. Just focused on the annualized return on investment. If it's greater than 100%, you're doing fantastically well. If it's higher than that, that's just superb. Look into your trades and see what you can do better next time. If you miss an opportunity, like I missed an opportunity, don't worry about it at all. There's always more opportunities coming along. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.